Hello there, Hector here, just recording a trade on the sterling pound against the Australian dollar based on the 4-hour time frame. It's a trade basically that's well, it's just a counter trend trade. In fact, I traded this very same currency pair last week. I took an entry, a short entry, that level, and well, as you can see, didn't quite work out. I scored a loss. Unfortunately, sometimes when you are trading, when you're trading counter trend trades, your win-loss ratio usually falls down, usually drops down a little bit, because again, you are trading, you're trading an aggressive strategy. This time around, on the first trade, I traded the breakout of this trend line with this breakout pullback continuation pattern. Well, first of all, let me show you the actual trend line. Just give me a second. All right, I hope you can see the outer trend line. In fact, it's a channel, right? Is somewhere like that. It is indeed a channel where price has been, flapping sideways for quite a few weeks, actually 3 weeks altogether. Eventually, we got the breakout there. Let me actually zoom in a little bit more to show you that breakout pullback. Okay, that breakout pullback continuation pattern, and well, right, that is where I triggered my short entry. But as you can see, well, price immediately after turn around and well hit my stop loss, unfortunately. But however, it's come back to retest the trend line from below. All right, this is a very typical price action pattern. Sometimes you get a breakout pullback continuation pattern that doesn't quite work out. The trend is still not ready to give in. Okay, at the end of the day, please mind that, well, we've been trending for quite a while, right? And there's still quite a buying pressure in this market, so the market's still not ready to give in. The bulls are not ready to give up on this trend. So, well, I got a fake entry there, which stopped me out on this trade, and then eventually price has come back to retest the trend line once again. Okay, this is a very typical type of price action. Price retest a breakout level. Okay, this trend line a few times before finally gathering the momentum enough to take off on a whole new swing. Okay, that's basically what I'm trying to. If I didn't profit from the first time around, I'm just trying to search for a further entry up, above. Okay, maybe the market will give me another opportunity to get back all those pips. Well, anyway, so what we have here basically is up on the breakout, and that fake signal, price retracing to Fibonacci territory, okay, which is as usual, the ideal location where you want to search for bounces. In this time around, what we have there is the 38% Fibonacci, and moreover, as let me zoom in a little bit more, we can actually see that pin bar, right? That pin bar formation right off that trend line, and moreover, now if I zoom into the trigger chart, in this case is the 1 hour time frame, well, we can see how price is actually pulling a 1, 2, 3 reversal formation. Okay, a leaning M formation, or however you want to call it. Basically, price is now pulling a lower swing high on the shorter time frames, along with a trend line breakout. Okay, with a trend line breakout, retracement trend line breakout. So basically, what I'm doing is I'm just trying to squeeze my entry as close as possible to the bounce point. That's the idea here. That's the idea whenever you are trading, whenever you're actually trading bounces off a trend line, right? At least from an aggressive point of view, this case, a reversal or a counter trend trade. That's exactly what you want to do. You want to nail your entry as close as possible to the retest level. There is certainly no way you want to wait for this massive breakout pullback continuation pattern. You want to turn it around and to trade that breakout, okay, this breakout formation as a swing trading formation, meaning as close as possible to the bounce point. So again, I zoomed into my trigger chart. I saw that 1, 2, 3 reversal formation. Okay, 1, 2, 3 reversal formation along with that trend line breakout, and well, that's where I triggered my short entry as the aspect number 2 of this 1, 2, 3 formation gave way right there. My stop loss is placed up there above the retracement point. In fact, it should have been above the aspect number, again, the aspect number 3 of this 1, 2, 3 formation. All right, right there, but it's just too close. It's a little bit too close from entry, so I decided to simply give it a chance and place it a few pips above that above today's high. Okay, as usual, I'm going to exit a portion of my trade at half the distance of the stop loss. Okay, this is entry, this is stop loss. At half the distance, whoops, right there is where I'm gonna exit a large portion of the trade, just to make sure that this I can certainly secure this trade, or I can register this trade as a risk-free trade as soon as possible. Whenever you're trading counter trend, you always want to minimize your risk as soon as possible, or to offset the risk as soon as possible. So what I'm doing here is I'm simply marking the midpoint of this distance from entry to stop loss, and that's where I will exit a portion of the trade. So if price upon touching my first target turns around and hits my final my original stop loss, which by the way I am not going to trail down, if price actually hits my stop loss, I will be exited out at break even. Alright, as far as the second target, as you can see, I'm from there. Once I've secured my my first portion of the trade, I will simply place my second target at the previous breakout point. Okay, just a few pips above that previous breakout point. Okay, right there, and then I will simply leave a small portion of the trade, maybe a 10-15% of the trade, run to the final projection target of this entire swing. All right, which takes me all the way down there. But as you guys know, I like to exit at 80% of the entire swing projection. All right, so I've placed my final target at 201.05. That's basically the trade plan here. Again, I'm trying to secure the trade as soon as possible. Then I will exit another little portion of the trade there, and then I will simply leave the final portion of the trade run to the full projection. That's basically it, really. Nothing special here. Typical up channel price action formation. Initial breakout pullback continuation pattern didn't quite work out. I am looking to trade a second chance of the second bounce. Again, this is very typical, right? This is very typical. You get a tight breakout pullback continuation pattern that eventually turns around, and what you get eventually is a whole swing. Okay, you are trading a whole swing here. All right, you are basically trading a whole swing as soon as the first swing, as soon as the entire trend is actually finished. Okay, it's actually broken right there. I believe that's pretty much all, guys. Whatever happens on this trade, once I am able to secure the trade at break even, I will simply let you know if I can. Obviously, this trade may easily turn around and hit my stop loss again. Hopefully, it will not happen. Usually, if the first attempt to the trade fails, usually the second one is a pretty safe bet. So, let's see how it goes. At any rate, once I am able to secure my stop loss to once I am able to offset the risk, I'll let you know. I'll update the video, and I'll simply begin searching for trading opportunities somewhere else. All right, folks, that's all. Bye-bye. Hello folks, Hector here. Just quick update. It actually hasn't been that long since the first update, but anyway, as you can see, my first target has been hit for plus 38 pips in profit. Again, I am not going to move my stop loss to break even, right? I am going to leave it as it is right there, and then I'm just going to let price run to the second target, and at this point is where I will indeed move my stop loss to break even plus the spread. Okay, the first target is just to secure the trade. Then the second one is where I will move my stop loss to break even, and then I will just let it run to its full potential. Target. At any rate, now the trade is a risk-free trade. Okay.